Okay, let's jump right into it. Today, the KOSPI closed down 0.20%. We saw AI CapEx doubts hit the index really hard right out of the gate. But there is a massive silver lining here because two distinct channels actually engineered an incredible recovery. So what exactly happened? Well, this morning, widespread fears over OpenAI's delayed IPO and some new low-cost competitors heading the market triggered a massively concentrated sell-off in KOSPI's heavyweights.
I mean, foreign net selling literally punished the market from the second the opening bell rang. We are talking about violently ripping 7.75 trillion won straight out of the ecosystem. It was like a waterfall of selling. And the epicenter of all this pain? The electronics sector for sure. It absorbed a staggering 94.6% of that massive outflow. Titans like Samsung Electronics and SK Hynix took some really heavy, direct institutional hits. So why did it get so bad so fast? It all comes down to a brutal chain reaction of automated selling. You see, because Samsung and SK alone hold roughly 57% of the KOSPI's entire weight, their sudden plunge dragged the whole index down below some really critical, preset quantitative risk thresholds. And crossing those thresholds? It's basically like tripping a massive alarm system. It automatically activated non-arbitrage program selling, unleashing an additional 5.15 trillion won in completely blind automated liquidations. The machines just took over. Now, this brings us to a super important market mechanic to understand here, the holding company discount. Basically, if a parent company holds strategic shares that it can't easily just go and sell, the market ruthlessly discounts that company's overall value. So as the core assets, meaning Samsung and SK, dropped, their affiliated holders, companies like Samsung Life and SK Square, actually fell nearly 3 times as hard. Their strategic stakes were instantly devalued, which just massively amplified the pain across the board. But right when things looked the absolute bleakest, we got a huge lifeline. 3 major megaprojects stepped up to fuel a massive recovery. Let's trace exactly how this unfolded. Just as the tension peaked at the intraday low of minus 1.85%, the entire narrative violently shifted. At exactly 2 p.m., the government stepped in and announced 3 massive megaprojects. This essentially acted like a black hole, instantly sucking in institutional capital. The targets for all this capital were crystal clear. We're talking semiconductor fab construction, AI data centers, and physical AI. And this wasn't just government talk. It was immediately backed by trillions of won in private commitments from none other than Samsung and SK themselves. This news triggered an absolute frenzy of capital rotation. The AI data center announcement instantly ignited demand for power infrastructure. It literally launched stocks like Doosan Enerbility and battery storage companies straight up. At the exact same time, the focus on physical AI directed some wildly aggressive institutional buying right into Hyundai Motor Group's robotics sector. Capital that had just fled from tech earlier in the day, it instantly found a brand new home. And while all that was happening with the heavyweights, a completely different, incredibly wild story was playing out over on the cost stack. See, while the cap-weighted KSOP looked totally red on the surface, the underlying market breadth told a totally different story. If you looked under the hood, mid and small cap strength on the KOSDAQ was actually glowing overwhelmingly green. I mean, just 28 minutes into the trading session, KOSDAQ 150 futures surged a massive 6.18%. This move was so aggressive, it triggered a super rare buy-side sidecar. The buying energy was practically out of control. So what was driving this insane momentum? It was the classic, brutal mechanics of a short squeeze. Investors who had heavily shorted names like EcoPro and EcoPro BM were suddenly trapped by that massive institutional rotation we just talked about. They were forced to cover their short positions just to survive. And their frantic, panicked buying launched prices absolutely vertical. We're talking up over 23% in EcoPro's case by the close. Absolutely wild. Okay, so what does this all mean for us going forward? Let's look closely at the hidden smart money signals. You really have to consider this massive divergence. Foreign investors were heavily dumping KOSPI equities today, right? But simultaneously, they bought up 918 billion won in futures. That is a huge signal. It shows they retain a really confident view on the market's upward direction, completely looking past today's immediate noise. Furthermore, the rotation on the KOSDQ is highly specific right now. It's almost surgical. They are heavily buying into AI connectivity and semiconductor materials
while ruthlessly dumping fab equipment names. The smart money is clearly showing its hand for next week. So yeah, the heavyweights definitely took a big hit today, but that rapid, violent rotation into infrastructure and physical AI proves that capital isn't leaving the ecosystem at all, it's just evolving. The real question you need to ask yourself is this: as AI shifts from digital software to physical infrastructure, is your portfolio actually positioned for the hardware revolution, or are you still betting on the old guard? Think about it. And hey, if you want these kinds of Asian market insights delivered straight to you before the New York bell even rings, hit that subscribe button. We've got you covered. See you next time.